Today we're going to be talking about support and resistance. I think that was our phase two. That was the topic we're starting phase two with. So we are starting with support and resistance. Let me just put that. Now, we're going to talk about this in a way I think most of the time people don't look at it like that. And especially most people that trade SMC, they just always feel like I don't trade support and resistance, I don't do this, I don't do that. Now we're going to look at this in a new way or in a way that you will understand it much better. Right now, remember in our previous lessons, I always tell you that when it comes to trading, when it comes to technical analysis as a whole, what we are doing is finding areas where price will not pass through and then we buy. Find places where price cannot pass through, they will sell. All right. That's just the logic behind all what we are doing as technical analysis. When you're drawing a line, whether your line is a trend line or it's a line from an order block or it's a line from a fair value gap, all you're trying to do or you're trying to say is that you want to find resistance at this area or support. All right. If this is a fair value gap order block, whatever, then that's simply what they're doing. Even if it is a moving average someone is putting on the chart, what they're simply looking at is price to support or that trend line, that moving average to support price from not passing through. So this simply means that all we are doing still lies on all in this topic, support and resistance, on maybe in the lay way of putting it. All right. Now, most people know about support and resistance like drawing lines on your chart and expecting price to come hit it and then bounce back. Do same here on the support level and stuff like that. Now we're going to look at it something similar, but I want you to understand the context behind all the meaning behind what this support and resistance actually is. Like I've just explained, everything that you're doing on the chart, whatever line that you're drawing, like for example, this trade that I took from here, if I draw a line from this other block, what I'm actually saying, all right, apart from putting in additional terms into it, is simply that I want to see price do what? Respect this other block. And if price should respect this other block, what is actually happening is that this other block has resisted price not to pass through it, right? It's just like you are teaching maybe ABC to little children, and when they reach a certain level, you start talking about lowercase numbers and stuff like that. Maybe you shift now from normal ABC into reading and teaching maybe harder stuff, right? But the whole big interpretation is that I wanted this other block to do what? Resist price so that it can go down. And in that case, we can say this was an area of resistance. Price found this as a resistance area, or someone that was trading a lay support and resistance, he would say that okay, this was my resistance area, and then price is selling from there. Now, also someone who was trading maybe trend lines, he would say that okay, this was a break and retest of my trend line. So what happened? Price was being supported by the trend line, and at this moment, it got broken. All right, and once a trend line is broken, it becomes a support or a resistance based on the direction of price. Now, everybody has its own way. Maybe you're going to see a moving average that was like this, and then it passed like that, and then what happens? They see this area to be an area that maybe the moving average has supported price. All right, so I want you to understand this support and resistance deeply. Now, for us as traders, how we are going to be looking at support and resistance, remember also we say that other blocks, fair value gaps, internal range liquidity, and all those levels, they are going to come in under this phase two, which we are starting with other blocks. All right. So today we are not talking about other blocks, which is still all going to be falling under these levels, right? Today we are simply just talking about support and resistance. Now, an easy way to understand this or to mark out this support and resistance, because we're already going straight into business, you have higher time frames, right? And this is actually one of the things that complicates traders. Time frame selection, starting from the higher time frame to the lower time frame. Like for example, you can look at maybe you can look at your higher time frame, and your higher time frame is doing something like this, and then when you go to the lower time frame, you completely see something totally different, And from there now, the trader is confused. He doesn't know whether he should be buying or he should be selling and stuff like that. That's where the big confusion comes in. But now, you now as a smart trader or going through this training, you will now understand that you have to have some particular time frames you are looking at. It's not every time frame that you are going to be jumping into, but sometimes you might have, let's say you can have, this is the 4 hour chart right now, right? Maybe sometimes if I should have gone maybe down to a little bit like to the 1 hour time frame, I wouldn't have seen a very clear key level to have used, right? But on the 4 hour, we have a very clean up close candle, which we use it as our other block. But if I step down to the lower time frame, maybe I will not have something clean like this. That's one of the reasons why you shift time frames from this one to this other one. But you have to group your time frames probably, let's say, into two. Let's say into two, where you have the higher time frames and then you have the lower time frames. This is very important, and we use the higher time frames here, which is going to be starting on the 4 hour right up to the weekly. Okay, maybe even daily, yeah, but we'll start from the 4 hour to the weekly. Now, not that we are ignoring the monthly and stuff like that. Since we are day traders, you can look at the monthly chart maybe from the beginning of the month or how the previous monthly candle closed. Just like today is the second, right? You now see how did the monthly candle for GBP GPY close. If that's what we want to look at for now, and then we'll see how did this candle close and where can we be expecting the next candle to trade into. That's all that we need when it comes to the monthly candle. Now you can see that this is like an inverted hammer, or if you are reading candlesticks, and let's just say, for example, just looking at candlestick analysis here, we can expect price to do or maybe trade lower throughout this month, right? That's all that we need at this point. That's all that we need. We just need to know that, okay, the monthly candle is likely to be pushing lower. But now, that's all. Then we start going out to the weekly. Maybe now on the weekly time frame, you check on Sunday when the market is closer. Okay, where is the weekly candle likely going to be trading into? Like, for example, here, if we say that, okay, throughout this week, we are going to be pushing down to this point. On Sunday, that's already all that we need. Once we put this line that this is where we want price to come down to, then all we are doing now, we are no more going to the weekly, but we have these lines now on our charts, even right down to the 4 hour. Okay, and if price comes to any of these lines, we'll know that, okay, hey, this price is hitting a key level on the higher time frame. So what were we expecting on the higher time frame when that happens? Were we expecting a reversal? Because this is now a weekly low. Are we expecting that once price hits this key level, this weekly key level, we are going to have a reversal, or for price to continue lower? So if price hits this level now, we'll know exactly what to expect. What I'm trying to say is that as we left the monthly and now on the weekly, once we look at the weekly on Sunday, that's it for the week. We only look at it again when price hits a key level that we marked out on that weekly, right? Now, we as day traders, we're going to be focusing more on the daily and the 4 hour time frame, which is going to be the time frame that we use maybe to use the daily for today, and then at the end of the day, you see how the previous day candle closed so that you know what to expect tomorrow. By 10 today, we'll have a close of today's candle on the daily. All right, and it depends how this daily candle will close that we'll know whether what is price likely going to do tomorrow. Let's say, for example, price trades into this fair value gap today and then it goes back up to close somewhere right up there. That will probably mean like a hammer or rejection candle, rejection block and stuff like that. Then we'll likely say that tomorrow is going to push higher. And if that's the case, then we are done with the daily chart. We'll now start looking at the 4 hour and the 1 hour to see what price action is doing at that level. But now, what I'm bringing your attention into is how to use time frames, so that when you're drawing your support and resistance levels, you should not be confused with time frames. Okay. Now, we have said that when it comes to support and resistance, we are focusing more on the higher time frames. We want to draw these levels more on the higher time frames. As we're going as from 1 hour downwards, we're using it as entries. We're using it as entries. And we'll talk about these entries when we'll start talking about other blocks and fair value gaps. But for now, we want to understand support and resistance, areas in the chart where you want to see a reaction. Now, the best way to actually understand this support and resistance, or to map out this support and resistance, is to look at it in a zone form. All right, look at it in a zone form, or even if you want to look at it in a line form, it's still not a problem. All right, but now we look at it, we use the line chart. We use the line chart to draw this support and resistance. Now, if we look at this chart right now, we're going to see that we have first, you are looking at call it the A and the V, something like that. All right, this looks like A, very sharp, and this looks like a V, very sharp. So this is a strong support area, and this is a strong resistance area. These are the places you have to be interested in on the charts. All right, when you see this, especially on the line chart, you go to the line chart, you mark them out. What you're actually marking out is, it's like there's a likelihood that price comes back to this point and then it goes back up like that. Now, take note, this is not likely going to be like this, especially on the line chart. All right, why? Because the line chart uses the candle closest to bring out a swing low like this. So sometimes a candle might form here, right, and then it trades down to the same point, and then it goes back up to close here, and the next candle opens here and then goes higher. Therefore, you are going to see that zone, which will now look like this on the line chart. But when you open candlesticks, you will notice that a candle came down, a wick came down to this point, and then before going back up. So what are we looking at? V shapes and A shapes to be our strong support and resistance areas, okay, especially from 4 hour upwards. Once we have these clean areas on the chart, we mark them out. Like, for example, we have this one. This is already a nice area to look at for maybe for buys if price comes down to it. Also, you know about break and retest, right? This is also another good spot for price to come down to it. And also, you always want to mark recent areas when price is trading within that zone. All right, but if price starts trading below this low, then I'll be now interested in trying to mark out an area like this one. Okay, but now once you mark this out, then you're done with the line chart. Okay, why I said it's a zone is because the fact that price is coming back to this point doesn't mean that price will just respect the zone to the peep and then move back up. Sometimes a candle will actually trade like that, and a wick trades into that zone, but maybe closes back higher, and then the next candle does what? It goes up like that. So that's why I mentioned earlier that we are looking at these areas like a zone. Okay, we're looking at these areas like a zone, but for us to have our work clean, we're going to use it just like we just put a line like this, but we know exactly what, if price comes here, we're going to be looking at. Also, take note that when you have an area like this, if you drop down to the lower time frames, maybe 1 hour and stuff like that, you're going to have a key level. You're going to have probably an order block sitting or a breaker block sitting around these areas. Okay, but on the high time frame, we see it as an area where we can actually expect some movement. Let's go back to the candlesticks and then we'll see. Now, looking at this area here, look at this one. Let me just replay this one here. Start new. Okay. Now let's look at this one. Now, if we're looking at price like this, okay, this was where price was currently sitting at this point. Now you map out, this is what? This is like an A shape, right? You mark it out. You know that when price breaks an area, there's a likelihood of a reversal, right? So at this point now, even if we're going down to the lower time frame, what are we trying to find out here? Let's go back to the line chart. Now we have an area on the chart that looks like that is a weekly, it's a weekly strong, it's a weekly support now, right? It's a weekly support zone. Okay, now this is an important area. If I see price coming back to this point, I'll be interested in trying to buy. And unfortunately for me, looking at on the daily, I have a very nice order block at this particular zone again. So what happens is that if price is coming back to this point, I'll be interested in trying to get a position. Now, do you see how that reaction is? If the more we go down to lower time frames, we'll likely now see maybe some very nice order blocks now around this point. But I believe you actually understand what we have just done here and why price tried to reverse exactly at that point. Now, if we go again, maybe let's say go back to the line chart and look at this area. This is another V shape here, right? I mean, A shape, very nice. And then on the daily time frame, we'll see how this particular area was supporting price. But then price did try to weak this fair value gap. Okay, but see, having an area here, which was an area of resistance, now a support, and then a fair value gap here. This is the knowledge that you have, right? This is the knowledge you have. It's the same thing that we did here. Here was an order block confluencing with this, and here is a fair value gap where price wicked and still was respecting this area here. Okay, so what am I trying to make you understand? Once you put on your line chart, you are very much interested in areas where, now look at this point. Look at this area. This looks like price did not come down to this point, but it actually did, right? It did, but price doesn't look like it did because it was just a wick that came into that zone. That's why I said with the line chart, it mostly shows the closest of the candle. All right. Now this is another point here. This is a very nice V shape, A shape point. Now, if we're on the daily time frame, price has broken out of that area. Now, if just with the concept of support and resistance, all right, you can see how price had fought around this point. You can see that wick. All right, you see the wick here, right? Let me put it like that. You can see that wick and these multiple rejections. And again, price came back, used the same area now as another support. And again, when it did at this point, it still came down now and tried to weak a fair value gap. Now, the importance of this is that when you have these key levels, especially on the higher time frames marked out on your chart, it's going to ease you to know some important zones on the chart. Remember, I said it's a zone, not just a particular line. You should not want to feel like, okay, as price respected like this is how it's going to be all through. No. Sometimes price might trade through it, but respecting some areas like fair value gaps like this, which we're going to talk about it, right? There's always a reason why price will come a little bit lower into a key level and stuff like that. All right, now let me just play this so that it goes right to the end and then see what is happening. This is another V shape here, this one, and then this is another one here. Okay, this is a V shape, this is another one. We have these areas on the chart just like what? The key levels, right? Especially in the high time frames, it's a strong support zone. So if price is coming down to it, we expect a reaction. And in this case, we had a CRT, which we're going to talk about it. And also there was an order block here, and the price reacted to it, right? So once we have this knowledge now, it's going to help us to know that, okay, if this is a zone at this point, then I should expect this from there and stuff like that. Now, let's look at this one, where price is currently selling, okay? Let's go back to the line chart. Now, if we try to look at this area here, we'll notice that we had another A shape here, this one. We had this zone, which is another A shape here, quite a sharp one as well. This was another one. Now, you would say that price is an uptrend. Good. Price is actually in an uptrend. But now, if we're looking at it on the higher time frame, we have reasons for price to maybe have a reaction, which was, I think, was a weekly fair value gap around this point. Yeah, this fair value gap, and maybe even a monthly order block as well. Okay, yeah, this is it. We are reacting from a monthly bearish order block. Okay, that's why probably you will say, all right, you are expecting a reaction, and also price took out all this buy side liquidity here, and we needed to come back for internal range liquidity. And in this case, we had lots of trend line liquidity here, and also we had this internal range low, which is like a liquidity, and probably price will want to trade down into this fair value gap, and who knows, maybe it can even come right back down to somewhere here. Okay, but for now, this is what we had here. This was now an order block. You can now see that at this point, price did not come right up to where we had the line chart ending, but it respected this order block, and this is now a zone for us. Like I mentioned, we are using a zone. Now this one here is about QMR, which is head and shoulder pattern. We'll talk about it as well, maybe in the course of this training. Okay, where you have head and shoulder pattern.
Click on it. You don't take it.
All right. Okay, so mainly the most important thing you're taking back home on this lesson is using the line chart to map out good key levels as from 4-hour, daily, and the weekly time frame. Even the monthly time frame, when you have these key levels on your chart, you're expecting a reaction if price comes to it. Now, it will be very good for you if you have what? If at that key level there is some confluence there, like an order block, breaker block, and stuff like that, it will help you even much better. Okay, let's look for another example. I think I had some couple of examples like that from gold. Now let's look at this one here on the daily chart. Let's look at this area. Now we had a break and retest, which is this one. See that was a resistance that was broken. This is another block, and also this was another resistance here that was broken. This one. Okay, and we had this one too. Though this is not that very good, you can just put it to line there, and then this one, see price was bouncing off from that zone. Now, look at these ones here. You can see how price actually respected. This is a breaker block, right? A breaker block is one that has maybe liquidity gap here. We're going to talk about it. This is a breaker block. And then this one as well. This is also a breaker. We had that liquidity rate from there before that pushed to the upside. And the price nearly tapped into that. I think it did not really touch, right? Okay, almost, and we had a very nice fair value gap from there. Okay, so this was an always zone, which means that with our entry model, we're going to have a confirmation here to start buying, right? Same thing here, because we don't just start buying immediately when price comes to a breaker, no, especially on the higher time frame, because this is a key level. So the moment price comes to this point, what are we doing? We're now looking for now our entry model to give us confirmation to start buying. All right. And if you feel like, okay, this is a resistance zone, when price comes to it now, what are you looking for? You are now waiting for a confirmation. Okay. You start looking at your model now to get in on that buy. All right. So now currently gold is trending higher, higher. We almost reached 3,900. I think we forecasted this. That was it on a live stream on YouTube. I think maybe. I think we're going to reach that. Maybe what about even 4,000? I think that gold will be coming up to 4,000 very soon. All right. I don't know. You guys have a question before we end this session? Is there any question? We just had this support and resistance. Also, there's about trend line. Sorry, I almost forgot that too. Let's go back to, anyway, let's just leave this one here for hours. Also about trend lines, all right? Trend lines, because there's diagonal support and there's normal horizontal support. Diagonal now is when price is moving, like in the case of 45 degrees and stuff like that, okay? The more inclined the trend line is, the more strong it is. But the more, the more it stands up like this, it's very weak. Price is likely to break through, but when it slips a little bit, when the angle of inclination is not that high, then it's likely more to support price. And it's, for me, you can also prefer that, okay, when you want to draw a trend line, you can still use a line chart, all right? You draw it. Now, when you draw a trend line using the line chart, at that point, because it's always based on closest, if you go back now to the line chart, you can try to adjust it now to fit maybe candle wicks or some other ones. All right, let's see if we can have any trend line example somewhere around here. Let's see. Let's go to daily. All right, so this is the daily chart. I want to see if we can have a trend line example. One that is very nice. Let me go to the page one. Okay, let's look at this one. I don't know if this is a good one. We have this. We have this. Now, let's just put something like this. This is like a trend line, right? Linking these two highs together. Now we go to this. Now at this point, maybe at that level you can try to adjust it. But at this point, price did not tap it here. Maybe it did at this point. But here, I would have still sold because I had a very nice inversion plus fair value gap here, right? So that was just maybe a confluence. And like I said, sometimes you can want to adjust it to maybe balance up or fit in that particular area, right? I always adjust it after you draw like that. You can try to adjust it maybe to incorporate some areas. But now let's see. Looks like we had even one bigger one here. Let's see. No, that was too sharp. Let's look at this one. I think this one is also gonna work. This one and then this low. And then we extend it like that. I'm interested in seeing what happens here. Go back to the line chart. Nice. All right. You can see we had a spike into that, and plus it was a good area for a fair value gap. So that's the most interesting thing, right? We're looking at a fair value gap that has to do with a trend line.